The banking system is the backbone of the financial system of any country. Banks are the main strands of this entire structure. Even the federal bank lies in the same category, except holding an exclusive right to issue currency. Although it's not that difficult to open a new bank to add another similar strand in the financial management system, we can suggest for you an easier way to do so. We wonder why you don't try another system of managing capital other than the traditional banking system and consider starting a new cryptocurrency and becoming a billionaire in no time. Sounds pretty interesting, right? We have more details on the subject if you stick around in this video. Today, we'll share a couple of facts with you that traditional banking systems won't want you to know about. If every Tom, Dick, and Harry gets to know these banking secrets, there's a great possibility that the current financial system might crash. If you find this video interesting, please like the video and make sure you watch it till the end so you get to know more about these amazing facts that we're about to share with you. So let's get started right away. Number 1, keeping your money in a bank is nothing but a wastage of time and wealth. You know that banks are not a place of making money, but to store it. Now, if I may ask you, how much profit can you draw by putting your capital in the bank? Also, does it give you any significant percentage of profit over your deposited capital? The answer is no. Statistics tell us that even one of the most reputable institutes like the Citibank provides rates which are lower than 0.5%. Meanwhile, the inflation rate goes upward in a continuous manner, which implies that by each passing year, your capital reserved in the bank loses its worth. With an inflation rate of 2.5%, your capital would increase by 0.5%. Each passing year, the worth of your finances decreases gradually. On the other hand, if you invest this money on some other assets, such as cryptocurrency, buildings, or any other property, the profit will be multiplying by each passing year. So the ideal place for making money is not banks, but other investment platforms. Number 2, credit cards are like the weapons of the banking system. According to an estimate, about 70% of the credit card users in the United States are unable to pay back their credit card debts. If you ponder upon this fact, when can a customer be able to pay back the debt after a few months, and that too when the balance would be significantly higher if they are unable to pay it now? Another thing about credit debts is that unlike your mortgage debt that stands on 3.5% per year, your credit card debt is 20% per year. That implies that most American credit card users are facing a situation of debt trap where they're taking more debt to pay back the earlier debts. This vicious cycle won't allow you to pay back all of your debts in the foreseeable future. In fact, according to a survey, most credit card users in America don't hope to pay back their debts in the near future. Although building up your credit score by using credit cards in a responsible fashion is a terrific idea, if you're unable to pay the extra debt, we would advise you to be careful with those cards. Number 3, banks offer friendly policies only to the rich. Putting it in a straightforward manner, banks are classists. You should keep in mind that banks are all about business and are anything but charity organizations. The only motive that banks follow is to make maximum profits. Banks are more likely to lend loans to successful candidates who don't struggle with financial issues, rather than risking their money by lending it to someone who might not be able to pay back their debt by falling into default. Banks prioritize giving lump sums of money to wealthy candidates. The reasons are pretty obvious. These wealthy candidates will pay back their loans and chances of default will be minimal. Consider yourself in this regard. Would you prefer to lend money to a friend who's financially stable or to another friend who might not be able to pay you back? Of course you'd prefer the first one, and banks operate on the same logic. On the other hand, the situation with cryptocurrency is different. With emerging trends of keeping online currency in form of Bitcoin or any other crypto capital, the biasness is not visible at a similar level. If you think that cryptocurrency is a puzzling financial transaction, you're probably underestimating the confusions created by the entangled system of traditional banking. Moreover, cryptocurrency can promise definite gains after some period of time. According to some estimates, there are more than 100,000 cryptocurrency millionaires around the globe, and you could be the next one. All you have to do is get a step further from that traditional banking system that's growing unreliable by every passing day. Number 4, you can make profits over investments by using bank loans. Yes sirree, you heard that right. Making investments by using bank loans can actually increase your wealth. In July of 2012, Mark Zuckerberg obtained a 30-year mortgage to purchase his Palo Alto home with about $5.95 million worth, which is located about 3 miles away from the Facebook offices. As we know, at 20 years of age, Mark Zuckerberg was 40th in the list of the richest men in the world. With $15.6 billion of worth, you might wonder, why did Mr. Zuckerberg opt to take a loan when he could easily afford the required capital? Why then did he choose to go for a mortgage? The answer lies in the workings of the banking system. Putting it simply, Mr. Zuckerberg took a loan because it was free money. We understand it might sound strange to you. Why would anyone give out free money if it's not for charity? It's actually all about the borrowing cost. Remember we discussed ROI and how ROI is unable to beat inflation? Also, that leaving your money in the bank can actually decrease their worth? Since interest rates go beyond 2.5, any money that demands interest rate lesser than 2.5 is basically free money. Mark Zuckerberg paid an interest rate a little higher than 1.05%, which made it profitable instead of making the given assets by giving his own money. Simply, it was a win-win situation for the bank as well as Mr. Zuckerberg. What we learned from this example is that rather than keeping your assets in cash, you can invest in other forms to make more money at the same time. Simply by saving 1 to 2% or even less than that can make hundreds of dollars for you. Number 5. Banks loan your money to others to make profit of their own. Have you ever considered what banks do with your money? Let us assume hypothetically that you gave your bank $1,000 to be saved. What the bank would do with this is that it would use your money to lend it to someone who wants to buy a car or build a home. The 0.5% profit that it might give you is not generated from the bank's own reserves, of course. The money that the bank lends to someone and the particular interest that it collects from the loan all come from your money. In addition, it won't even let you know who did it lend your money to. In other words, your reserved money that loses its worth by every passing year is lent by the bank itself to someone that you don't know for making profits, and you're the one that almost gets nothing out of it. That may seem strange and unfair, but it is what it is. Furthermore, you might be surprised to know that banks only keep 10% of the funds that they get from you. The other 90% is given out as loans. At the present interest rate, banks then receive a huge sum of money in the name of profits. To sum it up, the banking system might seem like a big scam to you. It makes you lose money gradually in the name of inflation rate and debt, like that from credit cards and others. We suggest that you consider cryptocurrency as the alternative instead of saving money in your bank account. With the technological developments, cryptos offer more reliable services that can actually help you save money. Likewise, it's also a fortunate development that cryptocurrency is now accepted as a legitimate financial asset on official levels. Investing in crypto is thus not a bad idea. In fact, it can make you much more richer in a couple of years. Let us know your thoughts about both banks and cryptocurrency and everything that you've learned today in the comments down below. Thank you so much for watching, and don't forget to like and subscribe if you haven't already. See you again soon.